15. Problem number 15. Surya Limited has provided you the following particulars. Prepare cash flow from operating activities by indirect method in accordance with AS3. Profit and loss account of Surya Limited for the year ended 31st March 2013 is given to you. You are given a different type of a profit and loss account. If you see, by operating profit before depreciation 11,01,600, operating profits before depreciation, then by profit on sale of investments, by refund of tax, by insurance claim, major fire settlement 1 lakh, depreciation, patents written off, provision for tax, proposed dividends, transfer to reserve, and net profit. You get net profit after all appreciations, or you can say after all appropriations. Additional information: 31st March 2012 and 31st March 2013 opening figures and closing figures are given to you. Inventory opening, closing, trade receivables opening and closing, provision for tax opening and closing, prepaid expenses opening and closing, marketable securities opening and closing, cash balance opening and closing are given to you. So you are required to prepare, you are required to calculate the cash flow from operating activities by indirect method in accordance with AS3. Can you do this problem? So what we'll do is, to eliminate doubt in our mind, we'll first of all prepare this P&L account in vertical form. Because till now we have been consuming P&L account only in vertical form. No? So let us prepare this P&L account in vertical form, then you know how to go backwards. Okay. Let's start. You can leave one side of the page for the solution, cash flow statement, operating activities, working notes you can start. Right? Preparation of the P&L account in vertical form. It is prepared in vertical form. Particulars, rupees and rupees. Operating profit before depreciation. This is definitely before depreciation and tax. Right now you already know the number. How much is it? 8 lakh? 8,900. Add other incomes. Subtract depreciation first. Less depreciation. What is the depreciation figure? Please tell me. 86,000. Now you will get profit. I want operating profit before depreciation. 11,01,600. Operating profit before depreciation and tax. Less depreciation 86,700. Profits before tax. Please tell me how much is it? 10 lakh 14,900. add, you can still call it as operating profit only because it's still out of operations only. Add other incomes. See the P&L account, there are some other incomes in the P&L account. Profit on sale of investments, refund of tax, insurance claim, major fire settlement. Other incomes. Profit on sale of investment, 10,000. Next, refund of tax, how much? 3,000. Insurance claim, 1 lakh. Total 1,13,000. Less other expenses. We can also call them as exceptional or extraordinary items. Okay. Other expenses. Patents written off. Patents written off. How much is the patents written off? 35,000. That's it. Remaining all items. Listen to me carefully. Remaining all items, proposed dividend, transfer to reserve, these are all below the line adjustments. So once we calculate net profit after tax, then we start showing all those numbers. So now you will get profits before tax. 10,92,900 less tax provision. How much is the tax provision? 1,25,000 is the tax provision. Profit after tax 9,67,900 less proposed dividend 72,000 less transfer to reserve 87,000 surplus
8,08,900.
So we have made it little meaningful. The account which was given, we have brought some meaning to that account now. Now where do we start in our cash flow statement indirect method? We start here at profit before tax and then we add back non-cash, non-operating expenses. We subtract non-cash, non-operating incomes. We also add depreciation to arrive at operating profits before depreciation and tax. Yes, everyone? We already know operating profit before depreciation and tax. This we can straight away take it in the cash flow statement. But normally what we do, we start with profits before tax. We add non-cash, non-operating expenses. We subtract non-cash, non-operating income. Depreciation also we have to add to arrive at operating profits before depreciation and tax. So now come back to the answer. Come back to the place we have left for writing the solution. Write down heading cash flow from operating activities. Profits before tax. This is our starting point now. You already know. You write net profit before tax 10,92,900. Net profits before tax 10,92,900. Add non-cash, non-operating expenses. Cash flow from operating activities. Particulars. Rupees. Net profit before tax 1092,900. Add non-cash, non-operating expenses. If I observe patents written off, it is a non-cash expense. It does not involve cash outflow. 35,000 have to add. Depreciation also have to add. Depreciation 86,700 less non-cash, non-operating incomes. Profit on sale of investment. Refund of tax. Insurance claim received 1 lakh. How much do you get now? Operating profits before working capital changes. You get 11 lakh 1,600. This was already available in the problem actually. If you see the account, operating profit before depreciation is 11 lakh 1,600. How do you arrive at operating profit before depreciation? Sales minus cost of goods sold, gross margin. Gross margin minus operating expenses is nothing but operating profits before depreciation. Operating profit before depreciation minus depreciation. Operating profits. Operating profits before tax. Add other income, subtract other expenses, profits before tax. Less tax provision, profits after tax. Less dividends, transfer to reserve, surplus. Now listen to me carefully. This amount of money, 1 lakh, insurance claim received because of a major fire accident was included in this number. If you observe here, while we are coming downwards, we have added 1 lakh to this figure now. But out of this 10,92,900, now I know that 1 lakh rupees was not because of my business, it was because of an accident. So cash which has not been received because of your business from your operations, you cannot show it as part of cash flow from operating activities. You have to highlight it separately and show it in the cash flow statement. Okay. So what I have done, I have subtracted 10,92,900 includes 1 lakh rupees. I have subtracted here. I am saying this is the cash which is generated from my operation, and then I will separately show this as a cash outflow, cash inflow. I will show it as separately as a cash inflow. This amount includes, if you see here, includes insurance claim. I am saying out of this 1 lakh rupees was not because of the, we can say, operations. Then later on I will show it's a separate cash flow, extraordinary item. Now you have to show working capital changes. Please show working capital changes. Working capital changes, quick. Inventory. What do we have? Inventory increase or decrease? Increase. Outflow 40,000. After inventory, trade receivables. Trade receivables. What do we have? Trade receivables. Increase. 67,500. Outflow. Trade payables. I'll continue this side. Trade payables. What do we have? Inflow or outflow? Trade payables. It has increased. How much? 63,000? 63,790 inflow. Provision for tax, we don't treat it as a current item. We deal with it separately. Prepaid expenses, what happened to prepaid expenses? It has decreased. That means it is an inflow. Prepaid expenses, please tell me how much? 2850 inflow. Short-term marketable securities, we'll take it as part of cash and cash equivalents. Cash balance is part of cash and cash equivalents. Okay. Now we will get cash flow from operations before tax. Cash flows before tax. How much? 10,60,740. $10,60,740. Now we have to show the tax payment. You have to show the tax payment less tax paid. I will say net of refund. Net of refund. Net of refund. Now please observe, we can do it by logic. If you observe, the last year's provision was 1,18,775. Okay. Current year provision is 1,25,000. P&L account is also debited with provision for tax. How much? 1,25,000. So whatever is the closing balance, it has been provided for during the current year. So during the current year, you have debited the P&L account, provision for tax 1,25,000. Closing balance in provision for tax is also 1,25,000. Now what happened to the opening balance in provision for tax? It would have been paid during the year. How much would have been paid? 1,18,775. But if you see the P&L account, we see some refund of tax also. We paid 1,18,775 and we received how much as refund? 3,000 rupees we have received as refund of tax. So net amount, how much is the net amount? 1,15,775 is the amount of tax we have paid. Now you will get cash flows after tax, ordinary activities. 9,44,965. Add insurance claim received. Extraordinary item. 1 lakh. Net cash flows 10,44,965. We are assuming that the goods were destroyed in fire accident. Goods relate to operations, hence the claim received is shown as part of operating activities. If assets were destroyed in a fire accident and you receive some claim, we will show it as part of investment activity. Did you understand? I am assuming that goods of the business have been destroyed in the fire accident. Insurance company has paid us some claim. Goods relate to our operation. These are operating cash flows but extraordinary in nature. Not expected to recur frequently. Rarely when our fate is not good, we are going to have these cash flows. I think we have taken one more example. Income from lawsuits. You have filed case against your suppliers. suppliers relate to our operations. You get some money. It's cash flow from operations only, but extraordinary in nature. It has to be highlighted separately in the cash flow statement. Is it clear? That is what the standard prescribes. Did you understand the payment of tax? Tell me?
Yes, sir.
No, wait. Just think about it logically. 3,000 rupees refund you got. You got some cash. Can I say this cash is from operations? Because of selling and purchasing of goods? No. That is what first I have subtracted. From the net profits I have subtracted. Because it was included, no? If this is my starting point, how would I arrive at it? I took operating profit before depreciation and tax. I subtracted depreciation, I got operating profit before tax. Then I added all other incomes. Refund of tax was also added. Can you say that this 3,000 rupees cash is generated because of my business? No, boss. Because the assessed tax liability was lower than the amount of, we can say, tax you have paid to the government. The government gave you some tax back. It is not because of purchasing and selling of goods you are getting this refund. So in this number, this is included. This is not our cash flows from operations. This is our cash flow from operations. So what we do, when we are going in the reverse direction, we subtract. Are you able to understand? But 3,000 is also a cash inflow, no? Somewhere it has to be shown as a cash inflow. So we are showing it as part of tax payment. We have paid 1,18,775 from one hand. Another hand we have received 3,000 of refund. So what is the net amount of tax we have paid? 1,15,775. So we have not excluded it. We have included it at the right place. That is what we have done. It is a cash flow. It is shown in the cash flow statement, but at the right place. It is not shown as part of operations. Okay. Come to problem number 1, exercise problems, page number 2.